How do we maximize income without taking risk? Well, first we have to understand taxes. So put up that graphic full screen, Aaron. So what we're saying here is, in this example, if we look at the taxation of Social Security, in this example, we've got a couple, husband and wife, drawing $3,200 a month. That's what the husband's drawing, and she's got $2,200 a month. And basically, for tax purposes, there's no taxes. Now, talking about your good cash flow, if all of a sudden you need $50,000 of after-tax income, well, you've already got it, and there's no taxes, right? You see, and this is worry-free. There's no big deal. But all of a sudden, you got lingering out there this $500,000 tax-infested 401k or IRA, and one reason you're not spending it, you know why you're not spending it, don't you? Number one, you think you might need it, so you're afraid to spend it, which, by the way, order this book, Live Well, Die Broke. Folks, this is a wonderful book, and it's going to help you understand what I've found in working with so many savers. The mistake everybody's making is they wait too long to spend this money, and a lot of them because they have a fear of needing it down the road with these, rule of 120 and all this goofy stuff. So what you need to understand is this isn't going away. This has a tax tumor. Whether you take it out and pay the taxes or you leave it to the kids and let them deal with the tax-infested IRA, it's got to be taxed. So what happens is, as you draw out money, and again, I'm going to have Aaron put that graphic back up, whatever comes out of there gets lopped on top of the Social Security, and this Social Security now, it goes on the tax return at 85%. They don't literally tax 85% of it, but what happens is the government comes in and says, oh, wait a minute, all that tax-free income you had from Social Security, now we're going to make 85% of it applied to the tax return for calculation purposes. Now, you might say, well, Tony, what if I got to 73 and I don't need this money? How can I keep that income tax-free? You might even want to consider something called a QCD. Well, why are QCDs so popular right now? Because if you take that money out and give it directly to charity, this never hits your tax return, folks. And thus, in this example, the Social Security could remain tax-free. So, folks, I run into stuff like this all the time. This is the type of training a retirement specialist understands cash flow and how to put more money in your pocket without taking all this unnecessary risk. So that's you right now. Maybe you're retired with the same old mantra of take more risk and hang in there when the market goes down and everything will be all right, and you don't even have a written game plan. Why don't you at least get a second opinion from us at Tony Walker Financial? Folks, this is all we do. We are retirement planning specialists. We work with over 3,000 savers. We are set up with our own proprietary software. We can get that written game plan in place, and you'll be meeting with me, Tony Walker, the owner of the company, to review your situation.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.